Well, to give us their views on the inflation picture and interest rates, I'm joined by Annaline van der Poel. She's COO at Debt Rescue, and Koketso Manu. She's joining us virtually, and she's a senior economist at FNB. Thank you so much, ladies, for joining us. Annaline, let me just perhaps start with you. Given the condition of the consumer, as you deal with consumers all the time, heavily indebted consumers, no doubt you would be in the camp that says, no, we definitely do need a further interest rate cut.
Absolutely. We're sitting with the announcement of the tabled VAT increase, which is tabled for 1 May. We've got electricity prices going up now from the 1st of April. And ultimately, consumers are absolutely drowning in debt in their repayments. Yes, inflation is stabilizing, etc. But the fact is we're still sitting with the hangover of years' worth of high inflation, and consumers are struggling. So ideally, we would love to see a cut. But the reality is we are in agreement that it most likely will stay unchanged.
So, Koketso, let me come to you. I mean, the US Fed decided to pause on interest rates, citing higher inflation concerns. Of course, our Reserve Bank will be looking at a myriad of data to make its call, but presumably that caution may be infectious.
Yes, definitely. And I think that's what's driving a lot of people's expectations that, the Reserve Bank will keep interest rates unchanged today. As you correctly mentioned, at the start, we really don't see any huge signs from the local front that suggest that monetary policy needs to remain tight. So it is mostly what's happening around the globe. And unfortunately, even though the Fed's caution is mostly related to their own internal dynamics, as if the U.S. administration has raised tariffs, that means it is more expensive for the consumer to purchase goods and services with regards to trade, for example, and that might be something that results to high inflation. But at the same front that, that is driven by, the U.S.'s local dynamics, what worries South Africa is the impact that, the global volatility has had on emerging market currencies. So that might be something that really concerns the Reserve Bank in terms of how that might filter through to imported inflation in South Africa. But in general, we don't think that the Reserve Bank will be concerned about that for the remainder of the year at least.
Yeah. Annaline, I was very surprised yesterday. We got the retail sales print showing that retail sales rose by 7% for the month of January on a year-on-year basis, which was completely unexpected and doesn't necessarily tally with the narrative that consumers are under pressure. What's your reading of that? Do you think that consumers are sort of overextending themselves with debt or credit in order to go to the shops?
Yes, absolutely. We are seeing that more and more. So unfortunately, consumers are sitting with a situation where usually about 5 days after payday, there's no money left in the bank and that they have no alternative. So even though retail sales are going up, it's most likely happening on credit, and it's very, very likely that unfortunately consumers are having to do so to find a way to put food on the table. So the sales may be going up. January obviously being beginning of the year, we've got kids going back to school, so there's additional expenses, etc. Not unexpected, but yet very, very likely that it's being done on credit and due to unfortunate circumstances.
Yeah. Koketso, I wanted your view on that. I mean, what would your understanding be around how consumers could, increase the retail sales number so much? Because that's very unusual given that it is the month of January.
Yes. I think, what has been driving retail sales, especially, it's not the first data outcome, right? The latter part of 2024 also showed us a little bit of resilience. And it seems as though it's mainly been a feature of lower inflation, so lower cost of living. Salaries are now starting to maybe keep up with inflation for the first time since after the pandemic. But most importantly, probably relates to the two-part retirement system. So those withdrawals came through after September of 2024. And we've heard from various research houses that when they do their surveys, it seems as though households have used some of that income or liquidity injection rather to draw down on, the level of how much they leveraged. So pay down some debt, repair their balance sheet to some degree, but also a lot of that has been used for spending. So it is something that could be supporting what you're seeing in the retail sales. And hopefully, as we go forward with the continuation of a cutting cycle, eventually by the Reserve Bank, even if it's not today, you might still see retail sales being supported by the consumer. But it has to be mentioned, it has already been mentioned at the start, that the VAT increase will weigh on that growth outcome for 2025.
Yeah. Annaline, look, many economists are expecting a pause in rates, but we might get a surprise and get that cut that we'd all like to get. But assuming later on in the year we do see a couple of cuts, 25 basis points, in the overall rate cutting cycle from September last year until, the end of this year, how much of an impact is, say, a 2 percentage point decrease in interest rate really going to have on consumer pockets?
Unfortunately, very little, because we still, even though inflation has slowed down, the cost of goods and services have continued to rise. It's not going down, unfortunately. So even if debt becomes slightly cheaper, we've got to factor in what the real effect is. A 0.25% installment on, for example, a 7,000 Rand vehicle equates to about 36 Rand. Then you've got fuel that goes up, you've got electricity going up, you've got VAT going up. They don't even just cancel each other out. It has such an insignificant impact that unfortunately not enough. Obviously we would love it, but realistically speaking, the net impact on us as consumers is negligible.
Yeah. Koketso, let me just ask you, what is FNB's view around how much we're going to get in terms of interest rate cuts for the year?
So our view is that you probably have another 50 basis points worth of cuts. So the first one will probably, or the next one rather, will probably be in May of 2025. Then the last one will probably be in November of 2025. So that would leave, your repo rate at 7%. I think in line with what has already been commented before, when you look at what remains in terms of the cutting cycle, it's not really going to be a huge liquidity injection, when you think about household cash flows and budgets every month. But I guess the quantum of the interest rate cutting cycle is maybe what can also be borne in mind if you think about the 125 basis points over the entire cutting cycle. It should relieve a little bit of the pressure that the consumer has been going through. But I guess what we all know from a policy perspective is that by the time that interest rates reach 7%, what that really means is that interest rates, as per our calculations, will no longer be restrictive on the economy. So, that comment around 25 basis points not really doing much is so correct in the sense that policy remains restrictive, even though you are still seeing interest rate cuts. So only when you see 7% repo rate, that's when you can call policy neutral, so neither restrictive or accommodative. It's only when you really get below 7%, as per our estimates, that you will see the Reserve Bank, being more accommodative to the economy, pumping up or supporting spending. At this stage, we're not really in that movie.
Yeah, indeed. I think Koketso is basically referring to the fact that average inflation right now is 3.2%, but the repo rate stands at 7.5%. And there the argument goes by some economists, that there's plenty of space for the Reserve Bank to actually cut rates and give us a little bit of financial slack. But let's see what happens. Thank you very much, ladies, to both of you for speaking to us and giving us your insights on this. That was Annaline van der Poel. She's the Chief Operating Officer at Debt Rescue, and Koketso Manu, Senior Economist at FNB. Finance